Hey traders, this is Jeff from ZenTrader.ca, and I've got a really important chart here, and then after this we'll get to some 60-minute charts of the NASDAQ, Dow, and TSX and see if we can't figure out what this market's going to do this week. This is a daily chart of the Dow, and what's really significant about this chart here is behind it, these peaks and valleys. This is the McClellan oscillator. And what is different about this rally that we have seen for the last month and a half is you can see here for the majority of from the middle of February on, the McClellan oscillator has basically been negative as we continue to go higher. And that in itself isn't all that telling. But when you go back over the last year and a half, and you look at these different periods, for instance, this square here, you can see here that the McClellan oscillator was very negative and then negative again. So there's some positive divergence there. But what happened is the market corrected. It tended to follow, well, not necessarily follow, but just react when the McClellan oscillator went down. So did the market. I didn't indicate the squares for the period, the time period to look at, but basically this period in time, the McClellan oscillator had dipped down. Yeah, there were bursts where it was positive, but if you just look at this period as a whole, McClellan oscillator down, markets down. Same thing here. Here, the McClellan oscillator was down a little bit, and then it rallied. But if you look at this whole period as a whole, the McClellan oscillator was in the red, and the markets had corrected. Same thing here, and then a little bit here. So if you look over the last year and a half, and I didn't go back any further than that, I actually didn't think I needed to, because every other instance where the McClellan oscillator was very negative for an extended period of time, a month or more, the markets generally went down, but during this period in time, we went up from about, I would say 12.8 is when this started to go into the red, and Friday we closed at 13.2, and we were as high as 13.3. So we've gone up 500 points during this very negative period of time. So I think this is significant. I it's one of those things that the markets really are starting to feel like they're running on fumes, and if this is any indication that the markets need to correct, it's, I don't really know much more to say about this. So, all right, I've got a couple more charts here. This is a 60-minute of the NASDAQ. You can kind of see we're in this channel here. Weakening RSI. But until we, break down, we've been making higher highs on the NASDAQ. But when you look at the Dow, there is some negative here. But again, until we break down from this box, there are some lower highs here. But you can just see we've just been, these are like Darvis boxes, just one on top of the other. And until we break this cycle, you really have to either be trading this from the long side very carefully, or from just from a more neutral standpoint, because it's I really feel like you're pressing your luck with each of these boxes. The odds are stacked against you that we're going to have some sort of a pullback. On the TSX, I mentioned on Thursday night's video that I wanted to go ahead and add to my EWC short position. I did do that late in the day on Friday. My timing signal for the Toronto Stock Exchange is still firmly bearish. I would have liked to have seen it stalled more at this support level. I would have liked to have seen that become more resistance. But when you look at the RSI, we're still below 60. We gapped up. There's really not much here that really tells me that this particular market's going to rally. So I'm going to stay short this market.